Many people believe that getting rich is a distant dream. But what if I told you there's a simpler path? Let me show you the reasons behind why getting rich is easier than you think. Yes, even for you. Curious? Stick with us until the end, and you'll be amazed at how attainable wealth can really be. Show Luxo-Life some love and let's begin. Financial education is the first step to building wealth. The reason financial education is the first step to wealth is that without understanding money, it's impossible to make smart choices. Many people don't realize that not all money is created equal. Knowing the difference between real money, like gold and silver, and paper currency, which loses value over time, is crucial. This simple shift in understanding helps protect wealth from inflation and currency devaluation. Inflation decreases the value of your money, especially if it's sitting idle in a low-interest bank account. Understanding inflation helps you grow your money by investing in assets that earn returns, like stocks, real estate, or starting a side business. When you learn how to make your money work for you, that's when real wealth building begins. A mindset shift can make wealth easier to achieve. Have you ever thought that maybe you're wrong about how you think about money? If you've always believed that wealth is only for the lucky few or that it takes extraordinary circumstances to get rich, it might be time for a mindset shift. The truth is, a change in how you think can make building wealth much easier. People who become successful financially don't just get lucky. They think differently about opportunities and challenges. Adopting a growth mindset is a game changer. Instead of seeing obstacles as roadblocks, they see them as stepping stones to learn and grow. When you shift from a fixed mindset to a growth mindset, you start to see possibilities where others see problems. Rich people don't dwell on failures. They learn from them. They take calculated risks because they know that each opportunity holds the potential for growth, whether it's investing in the stock market, starting a business, or trying out a new strategy. By embracing challenges, you unlock new paths to success. The key is understanding that setbacks don't define you. They help you grow into a better, smarter version of yourself. Now, let's talk about an abundance mindset. This mindset is the belief that there's enough wealth and opportunity for everyone. When you adopt this way of thinking, it opens up doors to wealth creation that you might have never seen before. Instead of focusing on competition and scarcity, you focus on collaboration and possibilities. It's about believing that you can succeed without taking away from others. With an abundance mindset, you realize that the world is full of opportunities to make money, and there's always room for more. Starting with small investments can lead to big rewards. Another reason why getting rich is easier is because you can start small. You don't need a huge amount of money to begin building wealth. Some of the most successful investors started with small, consistent investments. Compound interest, where your money starts making money, turns small investments into significant sums over time. The power of starting small is that it doesn't require a lot of capital up front. Even investing $50 or $100 a month can grow over time. Compound interest means your money grows faster the longer it's invested. Consistency is key. By setting aside a portion of your income each month, you're setting yourself up for future wealth. Investing in what you love makes wealth building easier. Investing in what you love is another reason why getting rich is easier, because you're not just investing money, you're investing your passion and knowledge. When you put your money into something that excites you, whether it's real estate, tech, or even a specific brand, you naturally put more effort into understanding how it works. This deep connection often leads to smarter, more informed decisions. You're not just relying on market trends or hearsay. You already have a genuine interest and the drive to learn more. This can give you a huge advantage over others who invest in things they don't care about or understand. When you're passionate about something, you're more likely to stay committed during the ups and downs of the market. For example, if you love tech and understand the potential of certain companies or products, you're more likely to make thoughtful, long-term decisions rather than panic during a temporary dip. Your passion keeps you engaged and motivated to follow market changes and adjust your strategy as needed. Investing in areas you enjoy naturally builds trust in your choices, which can make sticking to your plan much easier over time. Interest and knowledge in a particular field are key to making better investment decisions. When you're genuinely interested in a sector, you're more likely to stay informed, learn the ins and outs, and notice opportunities others might overlook. For instance, someone who loves real estate will be more likely to spot undervalued properties, understand market trends, and negotiate better deals. The more you know, the better you can predict what will succeed and what might fail, ultimately helping you avoid risky investments that don't align with your expertise. Passive income helps your money grow while you sleep. Yes, it's possible to earn money even when you're sleeping. That's the power of passive income. Unlike traditional income where you trade time for money, passive income allows you to earn while you sleep, travel, or enjoy life. Rental properties, dividend stocks, and royalties are common passive income streams. These income sources keep growing over time, helping you build wealth without constantly working for it. Once set up, they work for you in the background, offering financial freedom and flexibility. Building multiple passive income streams is smart because it diversifies your income sources. This ensures stability even if one source slows down. Passive income frees you from relying solely on a paycheck and allows you to focus on other goals. Tangible assets protect your wealth and keep it growing. Real estate, gold, and cryptocurrencies protect and grow wealth in today's unpredictable financial landscape. These assets act as shields against inflation and market shifts. Real estate, for instance, tends to rise in value over time, providing rental income and long-term growth. Gold is a time-tested store of value, often performing better during financial uncertainty. Cryptocurrencies like Bitcoin, though newer, act as digital hedges due to their scarcity and decentralized nature. Together, these assets create a strong wealth-building strategy. Investing in tangible assets shields your wealth from inflation. With paper money losing value, assets like gold and property maintain or increase value. Real estate generates income while appreciating over time. Cryptocurrencies provide a hedge against inflation and centralized financial systems. Smart saving and spending habits set the foundation for wealth. If you find it hard to get rich, maybe ask yourself these two questions. Are you controlling your spending? And are you saving money consistently? The truth is, smart saving and spending habits lay the foundation for wealth. Without a clear understanding of where your money is going, it's easy to fall into the trap of living paycheck to paycheck to paycheck. But when you actively control your spending and prioritize saving for future investments, you're setting yourself up for long-term financial success. It's all about creating habits that make your money work for you, not the other way around. Living below your means is key to building wealth. Many people mistakenly believe that in order to get rich, they need to earn more money. While earning more certainly helps, it's just as important, if not more so, to control your expenses. If you spend less than you make and save the difference, you'll be able to build up capital that you can use for future investments. This allows you to gradually grow your wealth without relying on a higher income. Remember, it's not about how much you make, but how much you keep and invest wisely that leads to lasting wealth Saving consistently is also crucial in wealth building. It's not about saving a huge lump sum at once. It's about making saving a habit. Even if you start small, putting aside a portion of your income regularly will help you build a solid financial foundation. This consistent saving gives you the capital you need to make smart investments down the line. Over time, those small contributions add up, and as you continue to save, you'll find yourself with the funds needed to pursue more significant investment opportunities that can truly accelerate your wealth-building journey. Taking calculated risks can accelerate your path to wealth. In order to get rich easier, you also have to take risks. But here's the key. Those risks should be calculated, not random. Taking well-thought-out risks in business or investments can open up huge wealth-building opportunities. Think about it. Many successful entrepreneurs didn't get where they are by playing it safe. They made strategic choices that pushed them out of their comfort zone, whether it's investing in a growing market or starting a business in a new field. Taking the right kind of risk can accelerate your journey to financial success. However, it's important to distinguish between taking a smart risk and being reckless. Calculated risks involve research, planning, and understanding the potential rewards and downsides. Before jumping into an investment or business venture, you should have a clear understanding of the risks involved and a strategy to mitigate them. This means you're not just gambling with your money, but rather making informed decisions based on data and insight. This way, when you do take a risk, you're setting yourself up for a greater chance of success rather than a random chance. Taking risks strategically rather than impulsively is what sets apart the successful from the unsuccessful. It's not about throwing money at every opportunity that comes your way. It's about making decisions that align with your goals and your financial strategy. When you take time to evaluate potential risks and weigh the rewards, you're more likely to find opportunities that can lead to substantial financial gains. These calculated risks can open doors that would otherwise stay shut, leading to bigger returns over time. Building a network opens doors to wealth opportunities. Lastly, to get rich, you have to make friends. But not just any friends. It's about building relationships with the right people who can open doors to new financial opportunities and business ventures. Networking isn't just about collecting business cards or adding people on LinkedIn. It's about connecting with others in a meaningful way, creating relationships that can lead to collaboration, partnership, and access to opportunities that may not be available otherwise. When you surround yourself with people who share your ambitions and values, you start to notice doors that were once closed beginning to open. The right network can provide you with invaluable opportunities. Imagine being introduced to a successful investor who offers you a chance to invest in a project you wouldn't have found on your own, or meeting an entrepreneur who's starting a business in a field you're passionate about and who might invite you to be a part of their venture. These opportunities often arise because you've put yourself in the right circles, building relationships that foster growth and mutual success. Networking creates those moments of serendipity, where a chance encounter can lead to the next big opportunity. Building relationships with other investors, entrepreneurs, and mentors also gives you access to a wealth of knowledge and insights. These individuals have often been through the highs and lows of their own journeys and can provide valuable advice. Whether it's guidance on making smarter investment choices or sharing tips on how to navigate challenges in business, these connections become a resource that helps you make better decisions. The more you connect with people who have experience, the more you can learn from their mistakes and successes, allowing you to avoid pitfalls and fast-track your own success. And those are the reasons why getting rich is easier than you think. If you learned something today, give this video a thumbs up, comment what you learned, and share it with others. If you are new to Luxo-Life, subscribe to the channel and hit the notification bell to stay updated. See you next time, Luxo lovers.